Hi, I'm Lawrence Sprung, and welcome to this edition of Midland Minute. Today we're going to talk about a topic that I wrote about a few weeks ago regarding year-end tax planning. It's very important as we enter the final weeks of the year that you understand what you should and maybe shouldn't be doing over the next few weeks. The first thing is we all want to make investments along the way. And especially this time of year, there may be excess capital at the end of the year that you might want to invest. Be careful. The first thing that we want you to address is non-qualified accounts, non-IRA, non-retirement accounts. This is a very unique time of year where mutual funds especially tend to make capital gains distributions. Now, what does this mean to you? Well, in essence, you can make an investment today in a fund, $50,000, $100,000, and get a $5,000, $10,000 capital gain for this year with only owning the fund for 6, 7, or 8 weeks. Be very careful. Mutual funds are starting to announce their capital gain distributions now. They will do that over the next several weeks and eventually make their distribution. So, you're going to want to be aware of what the tax implications may be if you make this investment today. Now, you can make investments in ETFs, for example, that won't distribute capital gains, and then transition them to a mutual fund after the first of the year and effectively not incur that capital gain. What's the takeaway here? If you're going to make any sizable investment into a non-retirement account, make sure you're aware of what the potential capital gains implications may be. This is something we're very actively looking at on a daily basis as clients are looking to add funds to their account. If you have any questions, you can give us a call on that. Number 2, tax loss selling. Are there accounts, are there investments in your portfolio that you effectively have losses in, and others that you have gains that you want to take those capital gains this year? Well, look at those losses. Maybe it's worth selling one of those positions, taking the loss, and offsetting some of those capital gains for this year. That's point number 2. Number 3, carryover losses. Do you have losses on your returns from way back from 07, 08, 09 when things were not doing nearly as well as they are now, and you were limited to only taking a net $3,000 loss, but you have a larger capital loss on the books? You may be in a position to take a large capital gain in 2017 and not owe any taxes if you have a capital loss that you can utilize. Number 4, have you maximized your retirement contributions? Whether you're contributing to an IRA, a 401k, or any other type of retirement plan. Have you maximized those vehicles? Do you need the tax benefit for doing so? And if so, think about what you can do between now and the end of the year to maximize that tax impact. Now, obviously, if you're contributing to an IRA, you have till April next year to do that. But if it's your 401k, you have only a few paychecks left in order to defer money into that 401k and mitigate some of that tax liability. So make sure you look at your next pay stub and see where you're at for the year. You might want to dial it up for the last couple weeks. And the last item, which we really can't speak much about because it's a big question mark right now, and that's tax reform. We're all hearing about it. We're all hearing about everybody in Congress working feverishly to put a tax bill together. The question is, does it get done in 2017, retroactive to January of this year, or does it not get done until 2018? Now, if it gets done in 2017, what does it look like? Who knows? We've heard a lot of different frameworks. They were supposed to bring out some type of framework of what the proposal was going to be today, and as we already know, that's been kicked down the line, and now they're expecting it tomorrow in some cases. Some people are saying we may not see it till next week. So what I would do is not rely on that tax reform for this year. Go on planning accordingly, and then if and when a reform bill is passed, make sure you're in touch with your advisor. or give us a call and we can discuss how this reform may impact you and your personal situation. So, if you have any questions or concerns about any of those 5 points that we had discussed today, please give us a call at 844, the number 4, Mitlin, M-I-T-L-I-N, and we'd be more than happy to assist you with any and all of these items to make sure you're putting yourself in the best position you can for 2017.